In this video, we'll discuss 3 key principles you need to know before the altcoin bull market starts off. And the altcoins are exploding, but we haven't seen anything yet. Let's get started. The markets are completely firing off, as in we have seen some upside, and that makes 2 big groups of people. And the first one is saying this is the end, it's a dead cat bounce, and we are going to start the bear market. And there's the second group, which is saying no, it's the start of the bull cycle, it's the end of the bear market, and we are about to witness the biggest bull run ever. Those 2 groups are quite familiar with this part of the cycle. And first of all, I think if you are part of the first group, then you haven't been watching any chart or you haven't been holding any crypto, because the past quarter has been absolutely disastrous for any crypto holder. And the past 2 years have been extremely painful, as most altcoins, for instance, Optimism, dropped by 90% since the high approximately 13 months ago. Ethereum dropped by more than 50% in the past quarter. And multiple altcoins, even meme coins, have been completely fading away. Flip side, they are also the ones that are going up the most, which we'll talk about in a little bit. But the particular statement saying that this is a fake run and it's about to go down even more is typical for this part of the cycle, as we are getting into that phase called disbelief. We're not there yet. It's just minimal, because 2 weeks ago, if you look at the Wall Street cheat sheet, we were seeing tweets and I've seen comments saying crypto is dead, ETH is garbage. And there were a lot of people saying or leaving the markets or liquidating their portfolios, saying that I was a complete fool for having my altcoin portfolio. So certain about the fact that the tariffs were going to call a recession to see those crash down. And now the momentum is slightly changing, in which the Wall Street cheat sheet is such a wonderful example of showing the first stages of that period, which is called the disbelief, which means that people start seeing that there is some upside. And that basically brings me to the first key principle to understand. And back in 2018, and that's why I brought up this tweet, Bitcoin was trading at 3.5K. And I think the entire social media on Twitter were saying Bitcoin is going to hit $1,000. And that was the bottom call. But during that period, people were assuming Bitcoin was going to go down even more. And actually, one of the projects of that period, called Substratum, went live to short their treasury on ETH at, I think it was $80. That basically was the bottom for Ethereum during that cycle. So this tweet from CZ is also saying that during those articles, and this was November 2018, Bitcoin was called a bubble. And little did they know, and that's familiar with this stage of the cycle where Ethereum was called dead, or Ethereum got bashed by Plan B, and that was actually the bottom call. The most important thing there is that you need to combat a different set of skills, which is related to your emotions. And in the past period, if you have been holding an altcoin portfolio, and in my case, I've been going down 70%, which means that I need to enjoy the pain of having a portfolio that goes down that much, the suffering that consists of seeing your portfolio going down day after day. Well, a lot of people were claiming that I was about to lose everything. So you need to combat the fact that your surroundings are saying the opposite of what you're currently holding. And because of your surroundings, you start to fear it yourself. And the longer that stays, the more the fear will start to take over. And that's why a lot of people start to lose it and sell their positions the longer it takes. Now, the portfolio comes back up again. And that means that you still have your surroundings saying it's a fake run, sell it all. And you internally start to believe and think that you need to get out of the markets at break even because you start making some more money. And that is a recipe to lose everything or put your potential upside, because if they start to run, the upside is way bigger than what most of the people are expecting at this point. So markets can go substantially higher than you expect them to go up, which means that if you were holding your portfolio through the bear markets, congrats, you're one of the few people that are still in the game, which means that you shouldn't be selling it immediately at the best possible time. You need to be combating the fact that the surroundings are still saying something else, and you need to combat your own inner emotions about the fact that you make money again and you get happy. You need to stay sane. So the first key principle is to avoid making wrong decisions, is to be holding your position as long as possible to maximize your returns at the beginning of the exponential curve. It's essential to stay in those positions as the returns will compound over time. Before we continue, one little question I have is that more than 40% of you are watching this video without being subscribed, and more of you haven't even liked this video. If you would like to subscribe or like this video, I make sure to continue building this channel, as it is a motivation for me to continue moving forward and to make the best content possible. So just go to the bottom of your screen, hit that like button or subscribe. And now we'll continue towards the second principle. The second principle, to be able to 20x your portfolio, is to compound and to be able to risk and de-risk your portfolio. And this might not be the most entertaining or great sort of component of this strategy, as for instance in the previous periods where we allocated everything into the altcoins, we had certain moments where we rebalanced it into more risk. But on the way up, you will start to realize that the fact that you keep on adding risk is going to yield a higher return. What I mean by that, if we take the first moment that we step into the altcoins and we look at those, and if we hold on to those levels, then we would have been yielding ourselves a higher return, basically just through going from less risky assets to more risky assets in the way down. So if we explain the fact that altcoins have risk, you need to realize that in the previous cycle, altcoins can go down 60 to 80% multiple times within a bull cycle. And those are the periods that we want to utilize and maximize our returns, as usually the tops are quite clear and you want to start de-risking your portfolio a little bit to be able to risk it even more the moment that the markets start to collapse. And I'm quite sure I won't be calling the exact top or the exact bottom. And it's not about being right or being wrong. It's about making sure that when I'm right, I make the most of it. And when I'm wrong, I lose the least. Which means that if we talk about de-risking and risking, is that the moment that the markets start to go up, you want to start de-risking your portfolio. So at this point, the portfolio value is $60,000, hypothetical. Once it starts to continue going up, if it goes to 150, 200, 300K, the potential impact it would have if it starts to drop is going to be substantial. So the charts go up, it starts to become vertical, and in that run up, you want to start scaling off a little bit to utilize and maximize those cycles, where if you have extensive corrections, you want to add risk, and that is when you want to go risk on. Now, let's dive into the portfolio and the charts. The first thing that I want to explain here is that in order to maximize your return and to have that exponential curve, right now you want to stay in your positions as long as possible. The more you stay in them right now, the higher your return will be over time. If you start having 100K and you double it towards 200K, you go out of the markets, your return is going to be 100%. But if you stay in it as long as possible and you start adding percentages to it, you start to have that exponential curve yielding you the maximum return that you're looking for. And that is if you go back into the cycles of 2020 and 2021, or you look at optimism, for instance, we always calculate the returns based on the previous low and the previous high. So right now we are at the low, and the return of the altcoin towards the high is based from here. So what you want to achieve is that in the first part you want to stay in it as long as possible. And in this case, optimism against Bitcoin has barely seen any move. We do have a bullish divergence on the daily time frame, and basically since the 2,800 sats level, we have been cascading downwards based on the fact that we had macroeconomic stables changing. So right now, that entire run up, so at least 2,000 sats, which is a 2.5x from here, I want to stay in my positions. And from that point on, I think we will start to have more other assets in our portfolio to de-risk ourselves. But until then, we want to make sure that we maximize those returns. And that is different than when we're looking at optimism against the US dollar. If we have the 2.5x on that pair, we are all the way back up to the previous high. But you need to realize that likely in that period, Bitcoin is going to be running up even more. And you need to realize that during this period, Bitcoin was substantially lower. Bitcoin is currently at 105K. Bitcoin was at 80 to 90K during those periods. Now, that means that looking at the USD pair doesn't make that much sense. And when we start looking and investigating the smaller coins, you can see that the smaller coins yield more risk and yield therefore a heavier correction and therefore more upside. As Warmore here is making that massive bullish divergence. And if we use the same reference in the fact that if we look at December of 2024, the first period where the macroeconomics started to change, it is almost a 4x to go to that break-even point. And that will be the first point for me to start saying, hey, we need to start selling off our position or rebalance it, which means that the portfolio is already going to be north of 200K. And the same can be seen on Omni, which also prints a massive bullish divergence, and going towards that level in December 24 is also a 5x from here. Now, if we look at the portfolio, this is the current balance. So we have 4 bigger ones, 5 smaller ones, which some are slightly bigger than the other, but we just had the rebalancing moment a few weeks ago, so I don't have the rebalancing ability at this point. But I wanted to explain the fact that we initially had the sell that we did on Tao back in December, or actually earlier this year, where we wanted to say, okay, the allocation of Tao is a little bit too much. We take a sell for Tao at this point. We also sold a little bit of Sai, and that $8,000 we moved into the smaller coins, which is more risk on, which is Omni, Rocket Pool. We did the same with Renzo, and we did the same with Aevo. And by doing that, we lowered the average price for those assets. So Renzo is now at 6 cents, as you can see, while the first buy was at 14 cents. So if Renzo goes back towards the level of 14 cents, this valuation of 3.7K is going to get towards 30K. And then we have a 2.5x, which is substantially higher than when we would have just been holding the position that we initially bought at 14 cents. So we yield ourselves a higher return by doing these adjustments. And that same principle applies when the things go up. So when the portfolio is going to go to 200K or 300K, depending on the market environment of that period in time, I want to start building more ETH. I want to start building more Bitcoin. I might be even allocating more into cash to just be flexible and to lower the downwards risk that I have, and to be able to allocate funds back into the markets when the markets are heavily correcting. Because if I yield myself a return to 250K, if I'm then able to at least dampen my downwards pain and say I'm going to have 50% in cash, and the other 50% corrects a little bit more, and I still have 200K after a big correction, and I do it again in those altcoins and I triple 4x it again, that's where the big run starts to kick in. That's where the compound starts to kick in. So the second principle here is to understand the de-risking and risking of the markets, and to understand that that will have a compounding impact and that you can make money upwards and downwards. And that this is the key of this altcoin strategy. The markets are super hard to read, and I clearly want to focus on the data because everything else is just purely noise. And the most difficult part, and I touched it in this video, is your surrounding and social media. The way to go absolutely wrecked with your portfolio is to listen what everybody is saying on social media, because nobody changes their financial path if they just follow the mass. You'll actually just become like everyone else, and that is the opposite of what you would like to achieve. So you need to be the opposite of everyone else, otherwise you're not going to change anything. So this means that even during these little rallies that the markets are providing, or the massive corrections that will happen in the upcoming years during the volatility that's going to skyrocket, make sure that you have your plan and your emotions in control. By having the ability to utilize and understand those changes, you will maximize the return and you will be able to change your life and your financial circumstances. Remember, during the first stage of the previous bull cycle in Q4 of 2019 or anywhere in 2020, nobody expected that we would be seeing the numbers that we saw in 2021, as we had the exact same arguments. ETH was dead, altcoins are too much, there is constant unlocks, where's the liquidity going to come from? In just 1 year time, this sentiment has changed, and all of a sudden some altcoins were just a little close to curing cancer or curing world problems, and everybody wanted to have them, and were predicting that they were going to do another 10x, which is then the moment to step out of the markets. So your goal is to be an observer, look through, right through those statements that everybody have, and just make the most of it in a financial perspective, and then you'll be the big winner of the cycle. And I'm here to just guide you and provide all the analysis that's required to potentially make good decisions. I'll see you again on the next update. Ciao. During these markets, I'm always looking for opportunities to build my portfolio, and OKX is bringing you an opportunity. They are the first fully licensed exchange in Europe with the lowest fees. And to help you a little bit with your portfolio and to celebrate this milestone, they are giving away up to 50 euros in Bitcoin if you sign up today on the exchange. Signing up can be done within 5 minutes, and if you deposit 100 euros worth of crypto, you'll receive the first 20 euros in Bitcoin. Start rebuilding your portfolio today. Go to the link in the description or scan the QR code and enjoy up to 50 euro in Bitcoin.